Good morning, traders. It's Richard Miller here, and I'm going to do an Ichimoku cloud chart market analysis of the ARK ETFs. We'll be covering the five ETFs: ARK Innovation ETF, Autonomous Technology Robotics ETF, Next Generation ETF, Genomic Revolution ETF, and the Fintech Innovation ETF. It's the 17th of March, and welcome to today's cloud chart analysis. We'll start with the ARK Innovation ETF. We've had a bit of a pullback now after becoming quite extended from the top end of the cloud. The ETF sliced through the top end of the cloud, did manage to rebound there briefly as that level coincides well with the standard line of the cloud. Then ran into trouble when the top end of the cloud became a new resistance zone, sold off, sliced through the bottom end of the cloud, and pretty much rebounded very closely to this cloud chart support level, this level there and that one there. These are somewhat key support levels. So the ETF did manage to rebound from there. We now tried to break through the top end of the cloud here. We're below the cloud, so from a Ichimoku cloud chart perspective, that's somewhat bearish. Price action below the cloud, so the daily is somewhat bearish. And the bottom end of the cloud now is the new resistance zone. You can see the standard line there and that front level there. Now these are the resistance levels to get through, but price action we really need to see a further rebound from these levels. Watch out for the turning line here of the cloud, as well as this level here. That should also 139, 120, 120 level should come in as a support zone here. So very important to look at that today, how the ARK ETF is going to perform. But there's still some downside risk to retest these lows on the daily, so watch out for that. But we are looking for a contrarian swing trade back up to the bottom end of the cloud on the daily of the ARK ETF. Now we can see here clearly we've had a MACD sell signal up here after the ETF became very extended. The ARK Innovation ETF became very extended from the cloud. You can see the distance here is quite wide. The front end of the cloud is a key support zone, 127. It struggled with that level, and there's downside risk to the bottom end of the cloud here. Significant downside risk to these old highs and this bottom end of the cloud here. But price action is still above the weekly cloud, and that is bullish long term. And we're having a bit of a consolidation or a pullback. Now, if we look at from this high, let me just, where's my measuring tool? From this low to that high is about what, a 383% move. Now that all happened from the second quarter or the first quarter of 2020. And so we can expect a 30 to 40% retracement, and that would bring us back to these kind of levels where the ETF rebounded from. So this is a kind of a normal pullback, and if you just look at the magnitude of that move, generally a 50% retracement, 30, and a strong trend is 38 to 40% retracement, and a strong trend is, you can expect that. Support levels to watch out for: the top end of the cloud here needs to come back in a support. If that fails, then these lows here, as well as the front end of the cloud, will be the next key support levels to watch out for. But overall, still we're not out the woods yet on a weekly cloud. We do need to see support come in, and we do need to see price action back above the daily cloud. So somewhat bearish price action on the daily cloud from an Ichimoku cloud chart perspective. Now, interestingly enough, the monthly beta, the 5-year beta, is about 1.6. So do remember, if the market drops 1 unit, basically the ETF should go to 1.6, a little bit more volatile than the standard market. So you can expect quite volatile sessions. Just looking at the beta, you can see the monthly upside beta is about 2 almost. So there's a significant risk in that you are trading a high beta ETF, and this type pullback is somewhat normal, considering that if the market drops 10%, this thing will go down 16, 1.6 or 60% more volatile than the overall market. So that's that one. ARKG, the Genomic one, Genomic Revolution ETF, similar type situation here. Let me just make this bigger. We're in a slight bearish now because price action is below the cloud. We do need to see the ETF regain support at the bottom in the cloud. Key levels to watch out for is this cloud chart level here. These all cloud chart levels are now key support zones to be tested. The bottom in the cloud is resistance. Now note that this cloud chart, the bottom of the cloud is resistance here, as well as the front cloud level to watch out for. These are all levels, as well as the standard line. These are all levels that the ETF needs to get past. So there's quite a lot of headwinds for it on the daily cloud. So we do need to see some stronger support come in to push it back above the bottom end of the cloud. So there is a bit of a risk there. There was a MACD sell signal way up, yeah, so it became a little bit extended from the top end of the cloud. And we can see here on the weekly, let me just double check we've got the right ticker here. Yeah, ARK Genomic, yes. You can see on the weekly it sort of became very extended. The slope is also very steep. And the other thing to watch out for when you see very wild price swings is generally not very good to have at the top end of a chart. You ideally want to see tight price action, tight accumulation like this. So we do need to see price volatility to come down. Yeah, on the weekly it managed to rebound from the standard line. So critical for ARK ETF, the Genomic one, to stay above this level. If this level fails, it's going to retest this high, and there is downside risk to the bottom end of the cloud here at 70. So there's significant downside risk in this name. Now, once again, if we look at it from a risk perspective, the beta here is 2.3, the upside beta. So it'll get back to these old highs pretty quickly, provided that support comes into the market. We also can see the beta of 1.6, so it's also quite a risky instrument, almost twice as much volatile as the market. So if the Nasdaq goes down 10%, this thing will go down 16 to 20% quite easily, so be aware of that. So this kind of pullback is somewhat normal, considering that we're looking at it from a beta risk perspective. So that's one to look out for. What we need to see, we need the catalyst. We need to see price action back above the cloud here, and that is a nice signal to remain long. But if we stay below the cloud, then we'll see these bottom support levels being tested, and there can be another entry points for swing trades back up to the bottom of the cloud. But the daily price action below the cloud, that's bearish for the time being. And the weekly price action, we do expect downside risk to, if support fails this level, to the bottom end of the cloud. Next one is the next generation internet ARK ETF, ARKW. This one is a little bit better shape. Also had a pullback since the price became quite extended from the cloud. We had a lovely rebound here from all cloud chart support levels. Let me just zoom in here. You can see here very close to this bottom end cloud chart level. Let me put a line in there. There we go, literally almost to the point. Rebounded from that cloud chart support level. And there was a cluster of cloud chart support level there. Let me just see, there we go. So we're back, just the price is open back below the cloud. That's somewhat bearish now. We do need to see support to come in. Watch out to see if support will come in here at this turning line. We could see that as a rebound zone for the ARK, for this ETF, the next gen ETF. But we need to see price action to be back above the cloud. The front end of the cloud is somewhat bearish, so there is downside risk to these old support levels. Let me put another one in there, as well as this level here. So the 174, it could drop back down 174, and that would be, if support comes back in there, that'll be a nice swing trade area back up to the bottom end of the cloud. So the strategy I'm looking for is I'm a swing trade, any key support levels back up to the bottom end of the cloud. Now looking at the weekly cloud, you can see it managed to rebound from the standard line or the baseline of the cloud here. The turning line is a little bit resistance now. So we'll see if support comes back in here. This is an ideal area zone for a swing trade, as it's now fighting for support at the front end of the cloud. You can see there that level of support there. It's fighting for support. If support fails, it's going to rebound from that line. If that line fails, then I think we'll hit this level here, and ultimately the bottom end of the cloud, the whole cluster of support here at the bottom end of the cloud. So watch out. We're not out the woods yet. But long-term bullish on weekly, still bullish with downside risk to the bottom in the cloud. And we also note that the beta of this one is 1.4 and 1.75. beta, so it's quite, once again, also a lot more riskier than the Nasdaq. So you can expect any kind of drop in the Nasdaq of 1 or 2% will correspond to almost double that in terms of a correction in the underlying ETF. So be aware that you just need to make sure you're not panic selling, because you are aware of the actual beta and how the beta impacts the stock, the correction versus the market. So watching out to see if support will come in and around these levels for a swing trade back up to the bottom end of the cloud. And the next one is the next generation, the Fintech innovation one. Yeah, we have a situation, managed to rebound from the bottom end of the cloud. Let me zoom in here. You can see a lovely rebound from the cloud. These old cloud chart levels got very close to that one, and these lows here, these lows came through as a critical support zone, the old cloud chart level there, as well as let me just do these ones here as well. And then an ultimate cloud chart support level is this bottom one here. So watch out for these levels long term. But we are now fighting for this level as a key support zone. That's the turning line. And the other one to look out for is this old cloud chart. So the top in the cloud here, 53.10, will be interesting to see if this ETF will rebound from this level today, because it's testing the bottom end of the cloud for support. If support holds, it's a nice entry point to swing trade back up to these resistance levels there on the daily. But we have a line in the sand there where the turning line, or the standard line is there, the bottom end of the cloud is there, and the top end of the front cloud there. It's a major resistance zone for the index for the ETF to get through. But looking closer to see if we'll get a rebound from this bottom end cloud chart support level. If not, fail, then we could see 51 pretty quickly, and if that will change the outlook from bullish to bearish if price action moves below the bottom end of the cloud. Now I've got the Fintech Innovation weekly chart. You can see the front end of it's fighting for support of the front end of the cloud. There is downside risk to the bottom end of the cloud here, where the standard line is. Let me just do another line in there. Key level to watch out for is this. So there's swing trade possibility if it gets to this level, 50.59. That's an area to swing trade back. See if support holds. There's a whole cluster of support there. If support fails there, then we'll see these levels here. Could see these levels. Yeah, there we go. And then ultimately the front end of the cloud, yeah, that is a significant support level. So once again, the beta there's 1.39, so it's not as volatile as the flagship fund, but still quite volatile. It's a little bit more volatile than the market. So be aware of that there is a possibility for quite a volatile correction. And don't panic. Just 20-30% correction can be expected if the market goes down 10%. Just looking at the beta of these particular ETFs. And the last one is the automotive autonomous technology and robotics ETF. This one, after a tremendous nice rally, got extended from the cloud, pulled back to the top end of the cloud. Let me just zoom in. Pulled back to the top end of the cloud, sliced through, rebounded from the bottom in the cloud. We can see these old straight lines here. These are major support zones on the clouds. And now rebounded from there, ran into trouble at the standard line there, which became resistance. And now we're stuck here between the standard line resistance, the front end of the cloud resistance, the bottom end cloud chart support zone. It's fighting for support at that level. Will be critical for support to hold there. If it fails, then we could see a test of this level here where the turning line is, and that can also be a potential rebound zone. And if that fails, then we'll go back down to these levels here, 77 for example, in that cluster of that level there. So watch out for. We're not out the woods there. Price action is still above the bottom end of the cloud. That's bullish and favorable, but if the price slices below, then we could change our outlook from bullish to bearish on this one on the daily. But looking at the weekly chart, once again similar to the other ones, where the top end of the cloud is a key support zone being tested. That's a level to watch. If support fails there, then we're going to hit this one there. But do remember, this is now all, once again, if we just look at how volatile this correction is, let's just measure that. That was a 26% correction, and the Nasdaq I think went down 12%. And if you look at the beta is 1.36. 1.7, 1.42, depending on the different time frame. Downside beta is 1.42, so roughly if the market's going to go down 1 unit, this one will go down 1.4 times that. So you can have an idea that yes, this 26% correction is somewhat in line with the beta of the portfolio compared to the market. So be aware, always keep the beta risk in mind in view when you trade these type highly volatile ETFs. Let's just go quickly recap what we do with the ARK Innovation ETF, the main one. We can see how we sliced, as mentioned earlier, we sliced below the cloud, so levels to, let me just draw a line in there. The level to watch out for is this line there, is a key, could be a key support level. And then the next one are these, there's a cluster of, draw that 117, so watch out for these levels. Could see their potential rebound coming from those. If that support level fails, then we're gonna hit this one 113, so watch out for that. Upside risk, upside targets are these levels here. Here we go, that's the standard line, and that coincides well with the front end cloud resistance. So we swing trade, we buy these support tests if they're successful, and when we navigate when it gets through these resistance to the upside. Turning to the weekly, there on the weekly chart we can see this is the front cloud support level being tested, failed that, it's fighting for that support zone, and let's just do another one. And levels to watch out for is this 120 zone here, as well as the bottom end here. So it's going to retest these levels to see how much support is in this ETF in and around these levels after this correction. But it's natural to assume that a correction of this magnitude, 383%, should have a 20 to 30% correction, and that would be normal. And once again, we know this beta is almost 2, so it's twice as volatile as the market. So you can expect a 10% drop in the Nasdaq would equate to roughly 20% drop in this ETF. So be aware of the beta risk when trading ARK's ETFs. Until next time, happy cloud chart trading.